WeWork, another tech IPO, joining Wall Street in September, just a few days to the IPO. Make sure to watch this vlog if you want to know if this stock is investable for you. Let's go. Make sure to subscribe to this channel if you want the latest news on the stock market, breaking news, insider news, all the other news. Just subscribe and you will be on the top of all investing information you need to know for value growth, dividend stocks and finance. So make sure to also hit and smash the thumb up button, because this will help this channel to grow more, spread the message and make us all investing more successful. So today we are talking about WeWork, another unicorn on the tech startup scene, and it's one of the biggest coming to Wall Street. So of course we are talking about it here. They just filled all the information, and let's dive into what is WeWork. Okay, so WeWork is a company that actually rent commercial properties, like for example a whole floor or offices in a building in very expensive cities like US, New York or San Francisco and so on and so forth. And then they are dividing and making the space nice, and then they are offering this space as office, as meeting places for freelancers or in commercial institutions, startups and so on and so forth. So actually they are the inventor, let's say, or the biggest one at least, in the space of space as a service. So against another membership fee or a rental fee of a monthly fee, you can rent space, you can have your own desk, you can have common spaces for commercial activities. So this is what they are doing. And for example, they are renting one commercial property for 15 years in the US and then renting it monthly wise or membership wise to their clients. They just rebranded to We Company because they have some other divisions as well, and they are considered as a unicorn. They were one tech startup that actually grew to a valuation of over $1 billion. SoftBank is one of the biggest investors as well. So make sure you come with me and I will explain to you what is important to watch. So they just did their obligatory IPO filling, which every company has to announce, some numbers, some financials before entering the stock market by an AI IPO. So they reported crazy loss numbers actually, but let's start with the beginning. So they will do their IPO as soon as September 2019. So we're just a couple of days away from an IPO from WeWork or We Company. So it's very, very interesting, because after Uber, Lyft and all the other Slack IPOs, this is the biggest one from the tech scene or the startup tech scene. Just a couple of years old, this company, and it's already so rich. They reported, and now hold your horses, because they reported $900 million loss, with a revenue of $1.54 billion that they just did in the first half of 2019. So just think about it. So they got $1.54 billion. Not only they invested and spent it all, but also they spent and invested another almost $1 billion. So actually for every $1.5 billion they got, they lost $2.5 billion. That's a huge thing, So they recently valued at $47 billion already from one additional investment of SoftBank, $2 billion they pumped into WeWork. So you see there's a lot of conviction from SoftBank that this company will be around for the next couple of years and decades. Another good number though, they increased 90% year over year to 527,000 members, and this is a very good number. If you increase by 90% year over year your income stream, which are memberships. So this is very good number. What else is to know? JP Morgan and Goldman and Sachs will lead the IPO for them. So this will be the two banks that support the IPO of WeWork. They have over 528 locations, and that's a little bit more than they had in the first quarter, which is 485. So you see, you know, they are almost getting 40 locations per quarter, so there should be something around 700 locations or 650 locations in the next 2 quarters, so the end of 2019. And the company said that 50% of the memberships are based outside the US. So you see, it's also 50% of the company is related to international properties, which I think is good as well. It's a good mixture. It's a US company. So if you're making 50% of your income or from your income source outside the US, it's always a good sign. And they actually 40% of them membership was also the fastest growing one. So this is also a good sign year over year. And last but not least, what is also very interesting though is that they having an exponentially growth. Actually, they put a statement from WeWork inside, which is our membership base has grown by over 100% year over year since 2014. So it took them 7 years to go to the first billion revenue, but then only 1 additional year to go to 2 billion, and then only 6 months to get to 3 billion, and so on and so forth. So you see the exponentially growth of the company is there, so this is a good sign. They want to raise approximately $6 billion with the IPO, which is a big number. So let's see what the critics are saying about WeWork. Alright, so obviously when a company loses so much money, 900 million US dollars until now, there's a lot of criticism. And this criticism, of course, saying, you know, when this company can make money, when they will be profitable, when they can make money for their shareholders and profit and dividends and so on and so forth. So I want to dive with you in a couple of this criticism. Like, for example, they are saying until now, this year only, they have 900 million US dollars in losses, following by 1.9 billion losses last year. So, you know, the train moves on. And they are saying that the business model itself is very, very fragile because they have so much liability. They rent leases for 15 years. You know, this is long-term business. And when the memberships or anything else stop to come in or decrease, which it actually does at some point, then of course it's not anymore stable and they can go belly up. The analysts even saying that, you know, with a burning rate of 150 to 200 million dollars per month, they take only around 6 months until they will get a crash of the cash. Total billion yearly obligation is around $47.2 billion. This is really, really huge. It's up from 34 billion that they had end of 2018. So you see a really strong growing number there. It's more than 30%. But this is not only so the cash burn and the liabilities is not only the only negative criticism, but also they are saying, you know, there's an all-men board of directors announced yet, so there's no woman in the board as the director, which is, you know, unusual and also, you know, a little bit critical, you can say. And also they are saying the CEO and founder Adam Neumann has lot of control of the company. So when you're betting on WeWork, you are betting on Adam Neumann, and he has lot of voting power. He has, through the new We company structure, lot of rights and so forth. So if he falls, maybe WeWork falls. So that's another big criticism point. So let's go into the summary. So let's summarize all of this and come to a conclusion. I believe, if you are a potential investor into WeWork, you have to know that you are investing into a money-losing business. So far, you investing into the future. You investing that Adam Newman is a great CEO for the company and will be for the next decade or so. Moreover, you are thinking or need to believe that the way to profitably, so that's it, that's the word. So when you are thinking the way is there, then you can invest into the company. Of course, it's a long-term shot, and there's just one of this kind of company around there. So the space and the competitors are not that much. So I think this is a good point, and you see a big growth of membership and revenue there definitely, which is positive. So let me know in the comments if you're investing in the WeWork just a few days out. And don't forget to subscribe and thumb up the video. Thank you very much for watching, and see you tomorrow.